I'm Michael Sabo, Senior Commodities Broker with RJO Futures, here on the floor of the CME Group, bringing you some commentary here in the energy markets. So let's get started with it here. September crude oil off about $2, trading around 105 and a quarter. And if you take a look at where we were here just several sessions ago, we were hitting a high of almost 109. Today coming down below 105. So we've seen already a $4 pullback, but this comes after seeing almost a $16 move higher since June 24th. So we've really seen that market come up. We were bouncing up around that triple top around the 98-ish area, and of course we broke through that, and we've moved quite a bit higher. Now, taking a look at the Eia data, we did see a draw of about 2.8 million barrels, right in line basically with expectations. Traders were looking for a draw of about 2.5 million barrels. So a lot different scenario than what we've seen over the last several weeks. If you recall, we saw a 10 million barrel draw, 9 million barrel draw, almost 7 million barrel draw, and those draws came basically outside expectations. But I got to tell you, a lot of traders are looking at that as a reason why to help push that market higher. But if you still take a look at the overall total stockpiles, they're still certainly, in my opinion, on the higher side. And although we've seen that come down a little bit, look at the 5-year average, look at the 10-year average, again, still on the higher side. So, part of that has been, I think what traders are starting to look at here a little bit is still the economic data. And one thing that I am a firm believer in right now is that China really is slowing down. Take a look at the HSBC PMI data that just came out recently. That was basically a miss. And we've really seen a lot of economic data that's been coming out of there that has been suggesting that that's starting to come down, which means we should possibly see a slowdown here on the demand side. Here in the U.S., we saw the housing starts report out this week. That was basically a bit of a miss, again, helping take a little bit of the wind out of the sails. Now, you look at the equities market, and of course, we've seen that market, it's really just keeps on climbing higher. I mean, that thing has really been still on the move, making new highs. But I think, if and when we see that market start to lose a little momentum, and I think we will, that's going to help push oil prices down even further. Europe got a little bit of decent economic data out, but there's still a big mess over there, so I don't see anything really changing. So bottom line is, supply side, I think is still ample in the market. Demand side, big question mark, and I think that's going to remain in the market here for some time. Now, we shift gears a little bit and start to look at the technical side of things. Market does appear to be pretty overbought up here. Again, we saw a $16 move higher, and we didn't really have a whole lot of news, a lot of fresh news out there. So, we are seeing the indicators turning a little bit, but I don't think it's going to happen all at once, but I think that market's going to target down basically around the 98 to the $100 a barrel area. So I think that's what traders should be looking at here. Right now, we're seeing weakness. We're trading near the lower side of the daily range here. And I think we're going to get a little bit of follow through with that, and then probably a little consolidation. There are a couple of different strategies there, and we could still see that market bounce back up again at some point, possibly look to make a double top before it heads on back down. So, give me a call, shoot me an email. You want to discuss that a little bit more. Got a couple different strategies on how you can play the market here, basically whether you're a bull or a bear. But, again, keep in mind here that, I think what traders should be focused on here is certainly to watch these next couple EIA reports here to really give that market some clear direction. If they're coming in around expectation and we're not seeing big, substantial draws, and I think that's kind of going to be right now a thing of the past. Remember here that when we start to see these big draws, that's about the same time that they really got the pipelines going in Cushing's, and that's where they store a lot of oil, and that's where the big glut was, and they've kind of moved some of that out of there, and that's what kind of caused, I think, the bigger draws. Now, looking at geopolitical events, which is slightly different here, we haven't heard a lot, things coming out of Syria or Egypt or Libya, but that still is a very real threat that could have some potential impact on the market. I don't think traders have taken really the fear premium out of there just yet. So if we see that start to cool or start to just fade away a little bit, that could help prices react to the downside here even a little bit quicker. Now, conversely, if things start to heat up there, they could jump that market a little bit. But I think, from a trader standpoint here, watch that 109, 110 area. I've mentioned that in prior posts here. The market could possibly get up there and make that double top. But give me a call, shoot me an email. We can go over some different strategies. Of course, futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.